Glenn Hutchins has done a lot of high-profile tech deals as co-CEO of Silver Lake, SunGard, Instinet, Seagate. But his latest foray may be getting the most headlines of all. That's Skype. Silver Lake is one of the partners in the group that agreed to buy the internet phone service from eBay.
But Silver Lake is about more than Skype, and Glenn Hutchins is about more than Silver Lake. And we are about to find out. Glenn is here in the studio with our Eric Schatzker. Eric?
Thank you very much, Mark. As you point out, we are here with Glenn Hutchins. Glenn, we have to start off with Skype. It's in the headlines. It's obviously the subject of some litigation. I wouldn't be surprised if you're a little bit constrained on what you can say, but I do want to ask you this. The founders of Skype have taken what some people might call a scorched earth tactic with regard to litigation. Has this caught you off guard? Are you surprised?
No comment.
Okay. Just so our viewers are clear, that's basically where we're going to go on the subject of Skype, because I don't want to waste their time. I certainly don't want to waste yours. Okay, let's move on then. Let's talk about finance. The G20 taking place this week in Pittsburgh. You've written passionately about how we need to look at the credit crisis, how it developed, and where we need to go from here. A lot of focus at the G20 on bonuses. You're not a banker, but you do business with these people. You were in the Clinton administration. You understand the kinds of pressures that policymakers are under. Are they taking the right approach?
By the way, do I get a break on my terminal service, price break on my terminal service for being here today?
We'll have to talk with the chairman, Peter Grauer, after that. That's right.
I think what we need to do is restore confidence in the financial markets. Obviously, the bonus issue is one that's created a bunch of political agita. I think the background of that is that we're in a time period in which American incomes have stagnated. A lot of people have suffered. Unemployment's going up substantially. America's in a transition. Important parts of our manufacturing base are in decline. And to see people making this much money, even though it might have been earned and might have been justified in some economic sense, it's a political problem, and it creates a lack of confidence. It contributes to a lack of confidence in the markets. So I think in general what we can do again, this doesn't relate to me, it doesn't relate to my firm, except that as participants in the broader economy, I think what we can do to restore confidence with a appropriate regulation of compensation as part of that is the appropriate thing to do.
When we think about regulating financial services, are there any guiding principles that you think we need to follow?
Well, yes. I think in general there are two key rationales for regulation. One is systemic risk. Does the firm generate, or its activities generate systemic risk? As a result, do we need to regulate it to protect the system? And second, is there a consumer protection element? And because we do need to protect consumers and make sure, again, people can have trust in the marketplace to do business with folks. And I think we learned from the mortgage economy that a whole bunch of people got products that were inappropriate for them, whether they were knowledgeable about it or not, we don't know. And so to protect consumers from those sort of problems and create consumer confidence in the financial system, again, I think is very important. So consumer protection and systemic risk.
Okay, as you point out, you're not effectively part of Wall Street. Why was it important to you to go back and understand this debate?
Well, I'm an investor. And for two things. One is that as an investor, I think you have to have you need to have a very thorough understanding of the market, of the macroeconomic environment as a backdrop to what your investments are, what your investments can be, and also I think that if you have a perspective that's useful to public debate, you have some degree of an obligation to share it with others.
Okay, let's talk about private equity. It did seem back in 2007 like it was the golden age. Doesn't feel like the golden age anymore. There's a lack of leverage that affects some firms, perhaps more than yours, but there's also a premium being placed on liquidity, as Larry Fink of BlackRock reminded us the other day. People shouldn't be under the misunderstanding, perhaps, that private equity is a liquid investment, but could it be caught up in the collateral damage as endowments, other institutions think carefully about how much money they're willing to dedicate to illiquid instruments?
Well, I think the biggest issue with respect to liquidity on behalf of the institutions that invest in alternative assets, which takes in private equity, hedge funds, venture capital, et cetera, relates to hedge funds. For two reasons. One is they were expected to own liquid instruments, which were rendered illiquid by the liquidity crisis. And second, they were thought to have, expected by their investors to have liquidity, periodic liquidity, and many of them put up what are called gates and restricted people's access to their securities. So I think that issue, the liquidity problem that we've all faced, relates more to the hedge fund business model than the private equity business model that was well understood to be an illiquid asset class. That's point one. Point two is as the resources in certain pools of capital shrink, There might well be smaller size funds in the future. There might well be less robust fundraising. But on the other hand, that's being offset by large pools of new capital in other geographies of the world entering the alternative assets
China,
market.
Singapore, that kind of thing?
Yeah, exactly right.
Okay, with about 30 seconds to go, you focus on tech. We just saw a big tech deal today, Dell buying Perot Systems yesterday, in fact. How's that going to affect your business? You've got a lot of big tech interests. You're competing for some of the same companies.
Look, I want to first congratulate the guys at Dell for that transaction. I thought it was a terrific idea, what they did, and I think they're on the right track, combining services with their hardware offering. It's consistent with a broad theme that we have had of the consolidation generally in the technology industry and the consolidation specifically in the services sector. So it's very consistent with our investment model. There are plenty of companies out there for us to invest in. We're not competing with Michael Dell for any businesses.
All right, Glenn, thank you very much. Glenn Hutchins, co-CEO of Silver Lake Partners.
So do I get that price break?
We'll be talking about it. Mark, Julie, it's back to you for the time being.
Eric Schatzker. Eric, thank you so much.